Hey movers and shakers, welcome to another exciting video. I am so pumped to be presenting this video to you today. Man, this is something that this technique of taking payments was a technique that I used when I first started my moving business that jumped me up within the first 3 months of me starting my moving business from nothing to nearly $50,000 a month, $50,000 in gross income. And back then, this was 2008. And I'm going to be honest with you, this video, it's a long one, but I want you to watch it all the way through because I've given you the benefits. I'm going to show you how to implement it. I'm going to show you what to look for and why it works. And I'm going to answer your top 3 questions about this method, right? So guys, please just do me the favor. Watch it start to finish, right? That's all I'm saying. I'm not saying, and have an open mind, right? But until then, let's just get into it. Let's just get into the video. It's already long enough, right? Let's go. I like you. I love you. Go and do something great today. Hey guys, just got done doing a video, and as you can see, I'm in my studio, and I really wanted to talk to you about you joining the 7-Figure Moving Academy membership group. Now, this membership group is small, and has its own unique place that is set up where we can discuss business and we can have a great time, just you and me and some of your fellow members here. Now, this is a paid group. I do have a free Facebook group, which you're more than welcome to go and check. There is a description, a link in the description of almost every single video I do on YouTube. And you're more than welcome to join that and get some good information. But if you want the stuff that I don't talk about on that Facebook group, and if you want the good stuff that's going to actually set you up to the next level, then you want to join the 7-Figure Moving Academy membership group. It is only $49 a month, but it's going to give you a lot of great information. And I'm going to you're going to have access to documents and sales patterns and information, as well as different free courses just specifically for you members, your face, that is not available to the public at all. And there are some paid stuff that you will have to pay even if you're a member, but there's some really good stuff that I do not do. Plus, I do offer free you can get a hold of me free when you're on that Facebook Membership Academy membership group. You'll have free access to a DM, so you can DM me and email me and talk to me personally, as well as all sorts of great advice from a bunch of other members that are in the group. Plus, we are looking for subgroup people. So if you want to run a subgroup for your area, you have the access to do that. So you can actually create your own membership or your own subgroup to help you out to make more leads, more sales, etc. So it's a really good group. I really ask that you take a look at it. There is no free trial time, so you either in or you're out. And if you want to invest in yourself, then this is your chance to invest in yourself and actually make more money. Because quite honestly, if you're not willing to invest in yourself, willing to invest in your business, then you're really not a business owner. And I really suggest you just go to the free group until you're up to the point where you actually get the mindset, hey, let's actually take this to the next level. And that's the guys I'm really wanting into the membership group. So if that's you, come to the 7-Figure Moving Academy membership. You should be seeing a link down here at the bottom or somewhere around in this video. And I hope to see you in that group. Hey, movers and shakers, glad to have you back. I want you to just take a moment and listen to what I got to say in this video. I really want you to take it in, absorb it, process it, and see if what I have to say doesn't have some sort of truth to it and makes sense. And I use sense in the sense of money and, dollars and cents, but also in making sense as well. So let's get into the video, right? Like I told you in the preamble, what is Amazon, Netflix, Disney, Walmart, McDonald's, and credit cards all have in common? Well, that is taking payments. Right? They take payments, they take systemized processes. They take systemized payments every month. Disney takes you $13 for ESPN, Disney Plus, and Hulu. Walmart, you can join the Walmart club, and they have a process. Amazon has Amazon Prime, and they take a monthly payment. Now, how do we use that in our business to make a lot of money? This is actually called the subscription model. And there's nobody who's going to teach you for this business. No one's teaching, not even that ex-con that is, you know who I'm talking about, who does the other stuff, right? Similar to this channel. Well, don't worry about it. No one is going to teach you but me. And I really want you to absorb it, because this is going to blow your mind. This is going to be something no one's teaching, and you're going to go, well, I never thought of that. And maybe it doesn't work for you, or you're scared and you're going to just ignore it. And that's absolutely fine. I just want you to listen to what I got to say and then make up your mind from there. So first of all, let's get into why taking payments is actually beneficial for you. There are a lot of benefits, but I've highlighted several of them for you. So let's go over the benefits of taking payments. Your first benefit is you're going to create more cash flow. That's right. You're going to have more cash flow coming in. There's more money going to be coming into the coffers that you can use then to upgrade your equipment, make loans on trucks, scale the company, hire new employees, whatever. This is the biggest benefit, in my opinion, because cash flow in your business is king. When you don't have cash to spend on the things that you need, that's when your company starts to fail. So this will help you create the positive monthly stable cash flow that you need to scale your business to the next level. And benefit number 2, it stabilizes your income, right? Having a stabilized income really takes you up to the next place. We're going to have good months. We're going to have bad months. We're going to have good weeks, bad weeks. We're going to have good days, bad days. Anybody who's been in the service business knows that those fluctuations occurs. But if we can keep our an income coming in stably, that is going to actually help us stabilize our business as well. It prevents us from having a lot of stress. It really does eliminate a lot of problems in the service business and in our business. Plus the cash flow thing. These two things, oh my goodness, they're awesome. Third benefit we're going to have is it's going to make it easier to finance, right? It's going to have, if you have a stabilized income, you have something that you can really go in, it's really going to be able to make it so that you can go get a line of credit, you can refinance the business, and this will help you to buy trucks, will help buy equipment, help buy property for your business, help get a loan for whatever you need. So this is going to make it easier for us to show a positive income continually. Besides our big mass, we're going to, it's going to allow us to show that we've got this stable income, and the banks and the finance companies are going to really like that. The fourth benefit we have is it's going to be easier to get credit. Believe it or not, it's, you go to your bank and you try to get a business loan or you get a business credit card. If you can't show a stabilized income, that it could be hard to get credit. Now, credit, depending on some credit companies and stuff, this is not really a big deal. They want to see the gross and the net and stuff. And I get that. Don't get me wrong. But this could actually help you get credit with some vendors, like local vendors for fuel cards and things like that. So this could actually help you get some more of the smaller type credit for if you've got a company that does your promo, who does your media, who does sells you your supplies like boxes, etc. Right? This will make it easier for you to get credit with those. You can say, hey, look, I got this stabilized income. You bring me so much of what I need, or you can fund my fuel or whatever. This will help you get that kind of credit that you need. The fifth benefit is it's going to reduce payroll stress. I mean, how many times, especially if you're a new and beginning company, when you get these jobs and boom, boom, and they get done and they're done great, and it comes time to pay the crew, right? Unless you're paying them under the table the day of the job, which some people do. And if that's you, I hope you realize deferring payments for a week or two is the best benefit, because then you could save up the money to pay the guys and then do taxes and everything. And it doesn't put you at risk if you're doing the daily cash under the table. Really, you shouldn't be doing that. But if you are, no judgment. But if you were to use this sales model, this technique, you can actually make sure that you have enough cash on hand to pay the crew, so that you're not having that stress of like, oh, I got to get another job to pay this crew, right? To do it, because, you don't have enough cash flow coming in. There's no stabilization, and you're like stressing out to do it. I've been there. I know. That's why I'm saying this really would help with your reducing your stress level and making sure that you can pay your people. Not only that, this also, when you have something like this, you can also start hiring administrative people, which can help you take your business to the next level. You need a general manager? Boom. You need an office manager? Boom. You need an accountant? Boom. There it is, guys. It reduces that stress, and it really helps you take it to the next level. I'm telling you, man, taking payments is a great idea, bar none. But let's continue on. The sixth benefit is this increases scalability. We've already been talking about that. It really allows you, if you're bringing in so much money, whether you're bringing in $1,000, $3,000, $5,000, or $10,000 a month, it helps you do scalability because of that cash flow. There's less stress. You can put money away into different accounts, like a maintenance accounts, payroll accounts, whatever. So this allows you to scale quicker and faster and make your business much more profitable and productive, right? With less people or more people or whatever you want. It's really good, right? So the seventh benefit is you can charge more. That's right. So when you offer to take payments on a job, let's say it's a long distance job, and the job is going to be $10,000, right? To sell this job, you could say, look, I understand 10,000 is a lot of money to come up with at this time. And especially in these economic times, a lot of people are not going to have the ability to have a lot of cash, or it's going to put a lot of stress on them. So you can ease that stress by saying, look, no problem. This is what we're going to do. You're going to give me X amount for a down payment. We're going to finance the rest. And you're going to give me X amount per month at this X amount of interest, right? We're going to extend the payments out for 2 years, and you're going to pay that amount. Will that help you out? Oh yeah, that'll help me out a lot. Awesome. But here's the thing. If they agree to it, instead of being a $10,000 job, it's going to be a $12,000, $13,000, $14,000, even maybe $15,000 job, because you're going to charge more to make it beneficial for you to take those payments, plus the interest rates and so on. So you're actually going to make more money by taking a monthly payment than you would if you were to do a one lump sum. I mean, this is how car companies work. They take, you go get a loan, you could do it like that, or the car company will be the finance company, and they'll go, good, give us $2,000. We're going to charge you instead of $2,000 for a car, we're going to charge you $3,000. And I'm just making those numbers up. That's not exactly what they do, but they do raise the price because they're going to raise interest rates to make sure that they get their money back. So in the end, your car, after 2 years, you're not going to pay $2,000. You're going to pay probably around $4,000 for that car based on how it's structured. This is the same idea, same method. All right. Eighth benefit for taking payments, it reduces claims. It reduces the claims because, get this, right? You offer a payment. You say, look, you're going to do this monthly payment, and you cannot make a claim until you are fully paid, right? That's going to be in your contract, ideally. If you don't put it in your contract, then, well, you're You deserve everything you get. I was going to call you a name, but that's not fair to you because that doesn't make true. But you're gonna imbibe a lot of risk by not having that clause. So they can't make any claims. They can't do anything on social media if they're not taking payments. They can only make a claim after they've made all the payment in full, right? That's going to be in the contract. If they do make a claim, right, and if it's a lit claim, fine, you handle it, you just do it, right? But it could become a breach of contract because if you put your in contract that no claims will be made until they're fully paid, then making a claim when they're not fully paid is something. One thing you could do on that is then you could create a waiver or whatever if you're going to do it. If it's a legitimate claim, if it's an illegitimate claim, then you could just tell them to pound sand and take their money back. And don't worry, we're going to be talking very soon about how to minimize your risk by taking payments very soon. But that's just one of the benefits. All right. Benefit number 9. It adds perceived value to your business, right? It becomes a little legitimate business. There's a lot of businesses that take in it. They're already accepting payments in various forms, like with Amazon or Disney Plus or Walmart or Netflix. They're already doing payments. If they got a car payment, credit card payments, they already know and understand the idea of payments. And they know that they can divert immediate pain for a little bit of stress relief and pressure. So you're going to get a perceived higher value in your company because the cheap companies, they're not going to offer taking payments. No other company is going to offer taking payments. Right? So by you taking payments, you automatically get a boost in your perceived value, in your perceived authority, and become a leader in your industry for your demographic and for your region. Because I guarantee you, your competitors are not using this model, my friends. They're just not. And this is one way you can differentiate yourself from the crowd. And I've got other videos about how you can do a unique selling proposition, and this could be a unique selling proposition for you. Let's go on. 10 benefit of taking payments is you can make more sales. That's right, folks. So you get these guys that have big moves or have a large move. They don't want to book with you because they're looking for a cheap alternative. Well, you could say, give me X amount of money for your deposit and then we'll take payments. And people understand that payments and they go, okay, great. So, a payment of $150 versus $3,000 upfront bill, when they weigh it inside their head, they're going to go with that payment because it's easier to make. They could go, yeah, I can justify that payment. So you're going to be able to book more jobs. You're going to make more sales. And because you're taking payments, you're making more money due to interest and the length of time and so on and so forth. So you're going to be able to book more jobs. So those jobs where they're all frustrated and with the other companies because they're just so expensive, you can say, I understand. I get it. I understand. This is what we could do for you. Give me this amount in a down payment, right? And we're going to talk about down payment, how you can, satisfy what you need to satisfy with the down payment. Give me X amount. We're going to go 2 years. Here's the interest rates and just do that. And they're going to go, yeah, absolutely. Yeah, that's what I want to do. Yeah, that makes sense. I could do that. And it's going to release stress. And then you're going to take away that anxiety. You're going to take away that stress level. And you're also going to take away that sales resistance that they have by taking payments. All right, here's the last benefit. Benefit number 11. The last benefit is it's easier to collect. That's right. You're going to go, but Jay, I could see all these problems, blah, blah, blah. And you're right. We're going to be talking about those problems, but it's going to make it easier ultimately to collect. So even if by having a number of these people taking payments, My mouth is so dry, I apologize, people. By taking these payments, we're going to have a number of them, and that's going to accumulate to a certain amount of monthly flow of income, right? So if someone does default on one of their debt, basically, or their loan, that's not a big problem. You follow a certain process and you can handle it, and you just replace it with somebody else, and then you keep that going. So it's easier to collect. You don't get stuck and mired. Like if you only take a payment for one or two people and somebody defaults, that's a problem. But if you've got a list of 5, 10, 15, 20 people making payments, it's easier to replace, it's easier to collect, and it's easier to stabilize. And we're going to go over that just right now. Okay, so guys, now let's go into now, how do we minimize and how do we maximize taking payments? How do we minimize the danger and how do we maximize the profit, right? So first of all, why does taking payments work? Well, first of all, it works because it lessens the shipper stress. And we discussed that in the benefits, right? It lessens the shipper stress level so that they're more amenable for you to actually sell that service and do that service and do a good job, right? Also, they're on the hook and they know that they're on the hook. So they're going to be on their best behavior at all times. So it lessens your stress. It also lessens their stress, right? It keeps them accountable. Number two, it's easier to pay more with payments, right? So the customer is going to be able to pay more when they take payments. 3, it's already used to paying monthly. People are already used to taking payments. That's why this works, right? Number 4, 2/3, and this is a proven statistic. The fourth reason why this works, taking payments works, and this is a proven statistic. 2/3 would rather pay more long term if offered payments, right? More people would, if you offered payments, would rather book with you, and this is a proven statistic, right? This is not me making up this story. 2/3 of those people who have got a $10,000, $20,000 moving bill, right? They'd rather have somebody to take payments on that. They'd rather make payments on 2 to 3, 4, even up to 5 years, depending on how much the bill is. Because they know the model, it's easier, it lessens their stress, and so on and so forth. This is why it works. You've got the benefits. Now, how do we actually minimize our danger and maximize profit? Well, maximizing profit is very simple. You're going to offer a down payment, a certain amount of down payment, and that down payment needs to cover your immediate overhead, which means if you're renting trucks, payroll, and taxes and so on and so forth, that, right? So for instance, 30% of the bill should be for cover your people. So take that 30% as the down payment. Hypothetically, we're going to just take this as an easy number to deal with. The bill is $1,000. 30% of that is $300, right? You're going to say $300 is going to cover, right? Is going to cover the payroll and the taxes, and Social Security, workman's comp, all that and stuff. That's what's going to cover that. So you don't have to worry about paying thing because it's going to be an immediate pay. So you can put that in your payroll and the guys are going to get paid, right? Then what's going to happen now is they're going to have a certain amount of payments, 1 year to 2 year ideally, but depending on how large the thing, like for instance, if you're doing a $20,000 move, and this is a big house going from like New York to California kind of move, a $20,000 job, you take your 30% for your payroll and immediate expenses, right? And then you're going to go for a $20,000, maybe 5 years is good. But for the most part, the average big move is like $3,000, right? So 30% of that is $1,000 down, and then you're going to finance $2,000 of that, which you can do over a year, 12 months, or 2 years, depending what's better for them and what works for you, right? So, and then you're going to charge a percentage, a percent for interest. And the interest could be, like right now, interest is probably going to be around 5 to 8% a month for that debt. So let's just it's not that or it's not that, but we're just going to make it an even 10%. So if it's $2,000, right, broken up in 2 years, that's like what, $170 plus 10% of the 2,000. So that's an extra 20. So their payment is almost $200 a month, right? So you're going to get nearly $200 a month. And if my math is wrong, go ahead and leave a comment down below, blast me and say, Jay, your math is wrong. And I'll have to go, okay, well, you're right. So I'm just making these as examples, right? So by increasing the percentage. Now, the longer you go, maybe you'll reduce the percentage. However you want to work that out, that's up to you, right? Or how much you want to offer as a down payment is up to you as well. And that's something you and your salesperson and the shipper could coordinate. So how much do you think could you afford immediately? Well, I could give you $500. Okay, you could give me $500 as a down payment, non-refundable. You're going to give that to me no matter what. Yes. Okay, good. We're going to then finance, $2,500. Okay, good. So that's $200 a month for 2 years. Right. Oh, okay, good. And so also we're going to add an extra 10% interest. And now that's a high interest rate, but you could do that typically, right? You're going to give a normal, typical interest rate, whatever that is, right? But we're just going to use 10%. So you're going to pay me $220 a month for 2 years. So after that's done, they're going to end up paying you, like just in payments alone, like $3,000 or whatever it is. Plus you got your down payment, you've got thing. That's maximizing. Now, when you compound that and you add more of these people taking payments, you can easily see, and typically the payments you're going to take, it's going to be right around $150, $200, maybe even up to $300 per month. But on average, let's say $200 a month. You can see you get 5 people paying you $200 a month. That's $1,000 every single month. If someone falls off, no worries. You add another person, back up to it. If you get 10 people, that's 2,000. 30 people, 3,000. You getting what I'm saying? All right. So, and again, if I think I screwed up on my math, but you get the idea. You can do the math in your head, right? Or use a calculator, whatever. But that's how you maximize. Now, how do you minimize it? Well, guess what, guys? There's contractor liens. There's credit. You can take it to the credit guys and have them if they default, they can you can go have a creditor go follow them up, right? You'll sell them the debt, or you can have an attorney that will collect the debt at a certain amount. And of course you're going to have to pay them. So, out of $2,000 debt, you're probably going to get $1,500, $500 is going to go to the attorney or the credit agency taking it, right? Or you can sell the debt, or you can sell the annuity. Remember JP Wentworth, you get your money now. You can sell your annuity at a discounted price, right? So, if it's a $2,000, you probably sell the annuity for $100 or $1,000 rather. Pardon my mistake there. And you don't even have to worry about that debt. You've got your money immediately, right? But Jay, if I take $1,000 for a $2,000 debt, I'm losing money. Yes, you're losing money, but you're getting that instant cash flow, right? So maybe you're not going to do that with everyone. And maybe you want to buy it. Maybe you need a new computer. You just sell one of the annuities, grab your money, buy the new computer. See where I'm going with this? All right, so it really does a lot for you when you want to do that. All right, taking payments is definitely something you want to do. Right? So, the top 3 questions I'm sure you're going to ask me, how do I implement this? Well, you're going to go to your lawyer and you're going to have a standard boilerplate contract made up for this, right? There's going to be fill in the blanks for the figures that you're going to do for down payment, interest, and length of terms of the loan. Plus, you're going to have them where they're going to put in their name, their phone number, email address. Every place you'll take a picture of their driver's license. So you'll need to do that. That's going to probably cost you probably $1,000 or so to go get that drawn out, but it's not very hard. But that's how you implement it. It's not that difficult. Or maybe there's somebody online that can do it, or maybe you have somebody. I do not have the paperwork, but maybe that is something I'm going to look into for you and see if I can't do it. And then I see if I can provide that to my paid membership groups. So be on the lookout. And what happened? But Jay, what if they don't pay? Okay, they don't pay. Well, you can, there's legal recourse. You can send them to a collector. You can ruin their credit, send it to the credit agencies and hurt the credit. You could put what's called a mechanic's lien or a contractor's lien on their home, right? Obviously, when you do this, you're going to want to make sure that these guys are somewhat credit worthy. You're not going to do it for the average daily, day move. These are the big moves. These are like multiple thousands of dollars of moves. You're not going to do it for somebody who's just moving their apartment or their home in one day. These are people that are like large loads, typically long distance, but they could be, local, depending on the size. You're not going to waste your time on the guys who are just transitory. These are going to be long-term people that you're going to allow to do this. You can do the transitory if you want. You're just going to open yourself up to a lot more risk, right? So it's the person that you're going to do this to. So if they don't pay, there's a lot of ways to get your money, right? That's not a problem. You're going to get less of it just because you're going to hire people and they're going to take a portion of it. That's just the name of the game. But you could also write it off on your taxes and you can make it up through that way. So you can pay less taxes, right? But let's get going because this video is obviously long as it is, but it's definitely something you want to consider, right? What if I need cash now? And I always think of that JP Wentworth, get commercial where, you get your money now. It's your money. Get it when you want it or whatever that is. But you get on it's basically you'll sell the debt to somebody or, or you can use that annuity to get a loan, right? I got 10 annuities. They add up to $10,000. You go to the bank. And the bank will give you, based on using those annuities as credit, and you can get a loan for like $8,000. I'm just giving you an idea. But there's a lot of ways to do it, right? It's not hard. You can go online to the University of YouTube and bada bing, bada boom. Now, I know this video, guys, has been a long video, but it is a masterclass on why you should be considering taking payments. I'm not saying that it's going to be the right business model for you. I'm just giving you an option. And using this option can be very, very beneficial and set you apart from all your competitors. So just absorb it. Please just think about it. That's all I ask. I'm not saying to implement it. I used it to very good success. I'm not saying that you should do it, right? But this is just a why. So guys, I hope you've learned something. I hope you liked the video. And if you didn't, I'm okay with that too. Just leave me a comment below. Tell me what you didn't like, what you did like, what you would like more information. If this was something that really blew your mind and you want to learn more, I'd like to hear about that too. I'd also like to hear what you didn't like about it. Or if you have some sort of vehement disagreement with this video, let me know down in the comments and below, right? And if you did like it or you didn't like, make sure you give me a thumbs up or a thumbs down. Subscribe to this channel. And if you did subscribe to it, make sure you hit the bell button so that you get notified when I upload a new video. Guys, I like you. I love you. Go do something great today.